Hi everyone, this is Ted Hill with Bay Area Funding Group. In this video I wanted to talk about credit reports. I first wanted to give you a little background and history on credit reports. I've been around so long in this industry for 31 years. I was in business before we had a credit report system as far as credit scoring system. The credit score system was developed in the mid-1990s to late 1990s. It was originally developed here in Marin County in the Bay Area. The three bureaus that are reporting all have a very similar algorithm. That would be TransUnion, Equifax, and Experian. And what this whole system was devised for was to basically come up with a way, a system that would score people based on risk, credit behavior, patterns, so that lenders could have a better handle on what kind of consumer you are as a borrower. Well, it's been helpful to some extent. To some extent, it's probably been abused in the industry through the years, but it is a critical piece of the puzzle in getting approved for a mortgage or getting any other consumer debt, for that matter. A couple things I wanted to talk about. I usually get one big important question that people always ask when I'm trying to pre-qualify somebody. I get the objection, I don't want to run my credit because it's going to hurt my score. I'm going to get a hard hit on my credit, and I don't want to do that. Well, that's a bit of a misnomer. Yes, it is true that there could be a reduction in your score if you do get a mortgage inquiry. But if you haven't been out getting other inquiries, other mortgage inquiries, or other credit card inquiries recently, you had stability, one inquiry is not going to hurt your score. So that's one myth I'd like to take away. The other thing is that you should know when you do have an inquiry for a mortgage, mortgage inquiry, you do have a 30-day window to have other mortgage inquiries from other lenders, and it will not hurt your credit score. The bureaus have built this in. It's just like shopping for a car, same thing. First inquiry is the hit, the rest of them are not for 30-day window. So please keep that in mind. The other thing that I get is some misconceptions about people managing their finances and thinking they're closing accounts, paying off debt is a good thing, and in theory, an absolutely good practice it is. But from when it comes to the credit score system, closing cards that you've had for 10, 15, 20 years really hurt your credit. So if you do have credit cards or accounts that you've had open for a long time, use them a little, pay them off. Even if you don't like the card, it's worth keeping because of the history that you have with that card. The other thing, if you do have outstanding credit and debt that you're rolling from one month to the next, one of the critical keys to getting your score higher is to knock down the balances related to the maximum limit of each card to 30% or less. That's a huge factor. If you knock those down, suddenly your scores shoot way up. So that's another key. If you do have rolling credit, try to pay down the cards to that limit, 30% or less. Obviously, it's better to have no balance and use them and pay them off monthly. But if you're stuck, that's a key, and it's a critical piece of information you should be aware of. If you have any other questions regarding credit reports or mortgage lending, feel free to reach out to me via email or phone call. Happy to help, and hopefully this video was helpful. Thank you.